Trade management and exit strategy, the art of holding. Welcome back. If you've made it this far, you're not here to gamble. You're here to master. Entry is important. But managing the trade after you're in, that's what separates the lucky from the consistent. This video isn't about fantasy profits or fairy tales. It's about logic, control, and knowing what to do after the trigger is pulled. So let's strip away the fluff. Let's talk about holding. About letting go. About not giving back what you've earned, and taking what the market gives without apology. The biggest lie: let it run. Let's get this straight, the idea of just letting a trade run is where 90% of traders bleed out. You've heard the lie: set it and forget it. Don't be emotional. Let the market work. That's not discipline. That's detachment. And detachment gets punished. Institutions, hedge funds, prop desks, banks, they don't let it run. They scale. They manage. They adapt. And they close positions strategically based on evolving risk and real-time data. Retail traders? They get greedy. They hold through reversals. They watch 3R float into profit, and then vanish. Because they were told to trust the plan instead of read the market. Trade management isn't passive. It's precision under pressure. Define your exit before you enter. Before you hit buy or sell, you need to know: 1. Where's your invalidation? 2. Where's your profit horizon? 3. Where are the danger zones? What will you do if price stalls, reverses, or consolidates? Here's the truth: a professional doesn't enter hoping for profit. A professional enters with a detailed exit pre-mapped. You don't ride blindly into battle. You plan the retreat before the fight. This is why most retail traders lose. They think the hard part is entry. But the real pressure comes when the trade is open, when it's breathing, alive, and moving. That's when fear, hope, and greed show up like ghosts in your trading room. Risk-reward isn't static. It's dynamic. Everyone loves to say, "I only take trades with 1:3 RR." Great. But what happens when price approaches 2.5 R and momentum slows? Do you still aim for 3 R out of ego, and lose it all when price reverses? Listen carefully, your RR is a guide, not a religion. You need to observe the live character of price. If price is slowing into a known liquidity zone, and rejection patterns form, protect your profit. If volume dries and candles show indecision, reduce exposure. This isn't weak. It's smart. You're not here to impress anyone. You're here to stay in the game. Scale out strategically, don't just close it. Here's where you level up: instead of one entry, one exit, think in phases. Phase 1, lock partial profit. At 1 R or key internal structure breaks, secure a portion. Cover your risk. Phase 2, trail the stop, logically move SL behind change of characters, break of structures, or mitigated zones, not random candle lows. Phase 3, let remainder ride toward high time frame targets. Ride the wave, but with structure. If you've locked in profit, your emotions are quiet. You can see clearly. This is how banks do it. They don't all in, all out. They adjust exposure based on data. You must too. The silent killers: fear, greed, and need. Once you're in a trade, your brain becomes your biggest enemy. 1. Fear tells you to close early. 2. Greed tells you to hold too long. 3. Need makes you chase a setup you didn't understand. This is where psychology becomes real. You feel your pulse. Your logic melts. You stare at the screen like it's a slot machine. This is why we build a plan: to protect you from yourself. Every professional trader has been there. Sitting in profit, afraid to close, then watching a perfect trade reverse because they refuse to follow rules. This is human nature. And the market feeds on human nature. Learn to silence the noise. Use the plan as armor. Let logic lead. When to exit, the signals. Here's what to watch for. 1. Price hits a higher timeframe key level. 2. You see a liquidity sweep against your direction. 3. Momentum slows, candles lose size, wicks appear. 4. Reversal structure forms on lower timeframe. 5. Change of character against your direction, the first crack in the armor. Don't wait for all 5. But when multiple signs align, it's your cue. Exit confidently. Taking profit isn't weakness. It's maturity. Avoiding the trap, giving back profits. This is how most traders sabotage their progress. They make a great entry. They're up 2R, 3R. Then they sit and hope for more. Hope isn't a strategy. You must treat open profit as capital, not fantasy. Once it's on the screen, it's real. If you let it evaporate, that's a choice, not bad luck. Remember, the market doesn't care how much you were up. It only cares what you kept. Why most trading gurus never teach this? Because it doesn't sell. Managing trades isn't hot. It's not exciting. People want flashy entries, magic indicators, and sniper setups. But what makes you profitable long-term is this: 1. Knowing when not to re-enter. 2. Knowing when to scale out. 3. Knowing when the move is over. The so-called gurus don't teach this. Why? Because they make money selling you signals, not teaching you to think, till you be able to do it alone. They want you dependent. Confused. Addicted to their analysis. But here, you're learning how to think for yourself. How to trade alone. How to read price. How to manage risk. And how to walk away with your capital intact. Everything you need is a computer, internet, and 1 hour in a day. That's real power. And it's free. In my channel only, everyone is sell this videos to you, and we will not stop here. Every 7 days I will expose secrets. I will teach you to become a real trader, to no one be able to lie to you. Final truth: winning isn't entry. It's management. If you remember one thing from this entire video, let it be this: anyone can enter. Professionals know how to exit. Protecting profit, adapting to market structure, trailing logically, that's where the money is made. This is how you become calm in chaos. How you stop reacting and start executing. How you stop needing the market, and start controlling how it pays you. You're not just a trader. You're an operator. And trade management is your mission control. Now take what you've learned. Apply it. Master it. And let your chart tell the story, while your risk stays safe and your capital grows. This is mastery. And it's only the beginning.